Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, back with his good friend, Mr. Stephen Dow. How are you?
I'm good. And yourself?
I'm doing well. Do me a favor, get the marketing thing out of the way because I messed it up in the first video and almost forgot.
we both did. So again, although I work very happily for Velocity Mortgage Capital, as I'm doing right now on screen, all the ideas and topics discussed on this channel are that of my own. So let's get it going.
Yeah. So one of the things I want to do, I'm actually going to do with Matt, the mortgage guy, next Wednesday is I want to step back, Stephen, and let borrowers, investors know all the knobs and levers, buttons that they could push to potentially lower the rate. So I'm just gonna throw things at you and
Okay.
talk about is it helpful? Is it not? Feel free to
Sure.
twist it anywhere you want to go.
Of course.
So the first one I think about as an investor is down payment, right? Obviously, lenders, the less risk, I assume, the lower the rate. But is that a fair statement?
Of course. I think that's maybe reasonably to think that's common sense as far as, our lower risk level, as far as leverage, would of course entice us to, want to do the deal. So yes, 100%. That's where we can make a lot more, make sense lending kind of calls as far as like if you're deficient in one area, maybe FICO score, maybe, DCR if you have to, but your LTV is like you said 30-40%, then
Yeah.
of course, why wouldn't we? You know what I mean? So to some degree that those are the kind of situations, but as far as what would impact your rate, that's more along lines of obviously, again, higher, better FICO scores, lower rates, lower LTV, of course.
So let's put some numbers on this, right? So again,
sure.
Back to the first question. The other thing I want to talk about is things you don't do, right? In the conventional world, they do 5% down loans. You don't go that high.
No, not yet.
Oh, there may be something
here's
coming.
The thing. I'm not saying anything, right?
I know nothing. I know nothing.
well, here's the thing. I like to kind of be creative in many ways. And so I'll always bring up possible scenarios to management. Like, hey, what if we have this, potential? What if, right? So I've got their ear about something. So I don't want to say
let's just talk about that. You don't do, first off, you don't do owner occupied loans.
We don't. No owner occupied on residential 1 to 4s. You can apartment hack. Yep. So you want to live in, pull an Arnold Schwarzenegger. So we could do those. Owner user as well. You're a mechanic or something like that, and you want to buy your shop done. Same thing with retail or whatnot. If you're renting from that place, you could buy that or utilize that as well.
So you don't do 5%. We obviously have crushed the 50, 40, 10, which is a combined loan to value. But just straight up single first 80% is the max, or is it 75?
It's 75 on the first.
So 75. Again, I just want people to know where the knobs are, right? If you're going to come to Velocity Mortgage and you got 8%, it's a no answer.
Right. And it's so specific to the property type that we mainly talk about, which is residential 1 to 4 unit, multifamily, and maybe mixed use. But as far as straight commercial, office building, retail, strip mall, warehouse, anything like that, self-storage, garage, we're at 70%. So, but primarily what this audience and your channel talks about, yes, we're at 75%.
Okay, perfect. So that's one. Now let's talk credit. Obviously, better credit, better rates, but let's give them some numbers. Where I mean, is 680
specific tiers? Easy. Yep. Lowest tier, typically 650 is our minimum. Okay. To 699 is our bottom tier. Middle tier is 700 to 749. Top tier is 750 and above. Okay. But here's the other part. We don't promote it because we don't want to put out like, hey, send us your trashy stuff, So we can do below 650. It's just that it's not on the rate sheet because that's not something. Because you know how the saying goes, you give them an inch, they'll take a mile. So I was like, oh, you'll do below 650. Do you take 500? No, I'm not. That's not what we want. You know what I mean? So case by case, lower LTV, just like you said, lower risk to us. We'll make the exception. So to give an example, not that I'm saying. I've done as low as like a 603 FICO, but I think we're only at 55% LTV, and it was like rate and term.
There was all kinds of other
hard money loan. Yeah. It was tangible benefit to the borrower. We're putting him into a fixed loan. It was just a win-win for everybody. So he was paying on time. It was just his credit got pulled so many times recently because they were trying to shop the deal, and they finally came across us because all these other claim that they could do this and claim to do, and then nope. After they pulled their credit, you know what I'm saying? For like the 7th or 8th time. So
Ding,
They never
ding,
miss the
ding,
payment.
ding.
A couple credit cards, a little bit, higher balances than we would, normally, like, or at least what the credit bureaus would like to see. So that kind of pulled their scores down, but everything paid on time, stuff like that, some money in the bank, little things like that.
So how about experience, right? Somebody comes to you as a first-time flipper versus a seasoned flipper. Does that change?
Perfect. In a sense of not so much in rate, it's more leverage. So on first-time flippers, we will entertain working with you, but we're going to reduce your max LTV since it's your first time investing. Of course. So instead of normally 80% coverage, it's 70%. Perfect. So you need to put down at least 30% down.
Okay. All right. I like it.
Okay.
I like it.
Yep. So go ahead.
How about purchase versus cash out refi? Is there a difference?
Thank you. That's where, again, certain levers, certain things that will impact your rate. So typically on refinances, your rate's at least 0.5% higher. Mm-hmm. No difference in cash out or rate term. It's just refinance. Okay. Other than that, mainly what you have control over would be the transaction type, your FICO scores, keep them as high as possible. In addition to that, though, my type of loans or my loans altogether, we can continue to keep that score high because anything that I do with you doesn't report to the credit bureaus. Right. So none of my loans will impact your scores as opposed to doing conventional. A lot of times, unless your income's kind of increasing or you're reducing a lot of balances, somewhat to the degree of what you're taking on new debt, I think your scores do get impacted, you know what I mean, to some degree. For sure. So the higher the debt you show, typically your scores are going to be reflected in that case. So again, none of my loans report. Brand new LLCs are okay with us. You can hold title as an entity as well. Multiple loans to the same borrower. So we've got a couple of students or subscribers that I'm on the 7th, 8th, 9th series of loans with them so far. So nice. Once they see kind of the light, so to speak, as far as the ease of use, the effectiveness, and within the confines of when they're crunching the numbers and they're doing the work, the rates don't really affect them.
How about if they're going to do like a bigger apartment or whatnot, debt coverage ratio? Is that kind of like, are there numbers?
Oh, thanks for bringing that up. DCR on multifamily only applies on loan amounts above 500,000 on refis and above 750 on purchases. So very helpful in smaller markets. Oh, that's interesting. To where 5 to 10 units or something like that. Yeah. Typically under $1 million. Not a lot of players in that space.
Right. That's interesting.
Yeah. Yeah. So that's why that whole apartment hacking thing, I was like, that could work in even smaller markets. Cause then, yeah,
there has to be a student or two, or hopefully a dozen that really look at repeating what Arnold Schwarzenegger did. He house hacked a 6-plex. You want to live for free? Stop looking at 4-plexes. Go house hack an apartment.
I think so. Cause I mean, again, as to some degree, maybe, buying homes may not be as affordable. People still need a place to live. So they're going to probably rent. So why not an apartment then?
How about the loan product? I've never looked at anything with you other than 30-year fixed. I never even asked, I don't think. Do you have a 15-year? Do you have a 15-year?
No. Well, here's the thing. We can adjust the amortization schedule how you want, but it makes no difference in rate.
So this is all about rate.
Yeah,
so it doesn't
just control it however you want. Yeah.
Okay.
If you want, I'll crunch an amortized 15-year payment for you. Make that payment the whole time. You'll pay it off in 15 years. If not, then you could, go back to your 30-year payment whenever you need to. There's other little, stuff you could do. Maybe make, you could break it all down to where if you made a half payment every, 2 weeks, the biweekly payment gain,
26.
It ends up being like one extra payment a year, yada, yada, reduced by 5 to 7 years. So there's stuff like that. But as far as what my product and how you can affect that, FICO score,
so the last
transaction type, LTV.
The last one I can think of is you offer a 30-year loan with the ability to have interest only for the first 10 years.
Yes. I was going to touch upon that. Thank you for setting me up.
Does that product change? Like if I choose just 30-year fixed the whole time versus let's just say up to the max 10 years, that product, does my rate change because of this or that?
It does. If you're looking for at least the interest only option payment, for the first up to 10 years of your 30-year fixed loan, you normally would have to add a quarter to the rate. Okay. But now, depending upon where, after adding the quarter to the rate, you still have the ability to buy down by paying points as well. So you can offset that. It just depends on the scenario and what makes sense.
All right. And then the last one you just brought up is buying points. All right. One of the things that people have to reach out to you for is they have to get the picture of their deal. And then you get to say, hey, spend a point.
right?
1% of the
I'll
deal.
throw out all the options for you. Once I understand, at least give me the target, because some people, they want to learn more so they can kind of get a better understanding of it. But then in some cases, it turns into like, non-QM 101. And I'd rather just give me a specific target as far as, okay, I'm looking to buy a single family at a price range of, 400 to 500,000, give me the terms at a 50, 40, 10 or max LTV. And here's my FICO score. Boom. Or the address or the city and state would be helpful as well. That's pretty much all I'll need. And I'll typically, coach you back within half an hour, 45 minutes, once I can come across the email with an exact quote down to the penny, your payment, your cost. Only thing I'm not going to give you exact amounts for is going to be your title insurance, because I don't, that's not me. And then the amount of impounds that they're going to collect, at the time of close to set up your escrow account to pay your property tax and insurance. But otherwise, everything down to the penny. And then I'll give you the option of, okay, at that rate, here's your payment. Oh, by the way, if you pay down, here's your payment. Oh, and if you add the interest only, here's your payment as well. Awesome. So it gives you all the options. Like, oh, well, then now I got all the hard numbers. I know all the total fees with the exception of the title and impounds. All right, let's shop it around or crunch the numbers. If it works in my spreadsheet, let's pull the trigger.
Yeah. So people got to reach out to you in my course. Again, the rates are going up. People get better deals. How do you want them to reach out to see what's what?
Again, SDAO@velocitymortgage.com. Subject line ORAAT. Remember that second A. In the body of the email, maybe brief description of what you're looking for, property type, address would be great. Maybe city and state, mid FICO score. If you got any desired terms, put that in there as well. And then the best phone number to reach that, and hopefully 24, 40 hours, but it's starting to stretch out to maybe 72 in some cases. But I'm working over the weekend like I always normally do. So we'll try to get caught up. But other than that, not to confuse pressure with urgency, but as rates have started to move and with the Fed claim to be more aggressive, we'll see, but it's going to affect our rates ultimately. So not to confuse pressure with urgency, but I wouldn't wait any longer of like, I'm wondering if we quote something, move on it, because when you're trying to shop in this kind of environment, it's a lose-lose, because by the time you come back around, my rates are right back up. And so just like anybody else. And so, yeah.
And it's no secret that July is right around the corner. The Fed's going to raise a half or 3/4. I've called 3/4. Right. So do yourself a favor.
Do the numbers, get it started. And let's get it going.
Let's go. All right, buddy. Thank you.
Thank you.